Well, I see we have participants starting to come in. That's great. I'm going to wait a few minutes, see if the numbers start going up and leveling off. I see Hamid again. I see Sky again. I don't remember everybody's name, but it's great to see some of the names I've seen before. So again, we're just going to give it another minute or so to see if we get a few more people in, and then we'll go ahead and get started. Well, I'm not seeing more come in at the moment, but more might. I think I want to go ahead and get started. So, I'm John Goldberg, a business advisor with Small Business Development Center in the Sacramento Valley area. And we have Gwen English, who has not been on these sessions before. She works in marketing at Sacramento Valley SBDC, and she's going to be the person who's managing the Zoom call today. Gwen, do you have anything you'd like to say at the beginning?
Not too much. It's a pleasure to be here, and I'm very excited for you to take it away, John. So thank you for letting me be on the call.
Terrific. And I'm very glad that Corey Kaler is with us again today. He was here for the first session to welcome everybody, and he's here for the last session. So Corey, I know that the topic for you today is to share sort of resources for businesses in Davis, in the Davis area from the Davis Chamber of Commerce. So if you could do that, that would be great.
Yeah, thanks, John. What a great opportunity to partner with the SBDC. It's a great resource for businesses. You know, if you're a business owner out there, you need help, right? There's a lot going on: legal, employment, HR, how to attract customers, how to use social media. You need assistance, and chambers are a great way to get information and resources that you need. The Davis Chamber of Commerce, I've been the executive director of the Davis Chamber of Commerce for over 5 years now. We've been around for 119 years. And the Davis Chamber was started by a group of small business owners who needed assistance and wanted an organization that represented business owners. If you're not part of a chamber, you really should be part of one. Let me tell you just a little bit about the Davis Chamber and what we offer. I mean, you know, if you're a small business owner, what do you want to do? You want to attract customers, right? You want to open your business, acquire customers, get revenue coming in, make money, make a profit. Chambers can help you out with that. Our chamber refers hundreds of referrals every single year. People like to have chambers refer people to them, and customers want to know who to do business with, and they look to chambers as a good resource for that. Our chamber has that. We've got a great website. We got a great referral service. Our chamber provides free services for our members. We provide free legal advice by attorneys. We provide free HR advice. We provide free tax advice. We even did a free session with an IT expert on how to remove viruses from your computer if you get hacked into, which was a great session. I learned a lot from that. We do a large event. It's called Celebrate Davis. We have about 12,000 people come through to look at local businesses and what they have to offer. We do a number of community events, like our cleanup events, where we clean up businesses in surrounding areas, downtown and that. We do a number of charity events as well. Coming up in a couple of weeks, we've got our charity golf tournament. We provide 2 $1,000 scholarships to graduating high school seniors. We do about 50 to 60 free virtual education sessions a year. Those include legal issues, HR issues. We partner with our police department on crime prevention. We do tax, how to minimize taxes for your business. We do a number of networking events too, evening mixers, breakfast, networking session, luncheons. We have an electronic newsletter that comes out weekly with information. We do an annual State of the City that provides all the information kind of you need about what the city budget looks like. We partner with a number of organizations to provide information about candidates running for local elective office, which is great information to know. You need to know who is making policy in your city, and a chamber is a great way to get connected to those candidates. Our chamber looks at a number of economic development projects each year to try to, grow the pie, if you will, more jobs, more housing, more commercial sectors. We do a number of job resource centers and career fairs. You really need that if you're a chamber and if you're a business community that is looking to hire folks. And we create a lot of different partnerships. One of them is the SBDC. We've worked with the SBDC well before I got here. They're a great resource. We refer a lot of folks to them. They have a number of great programs and services. If you need more information about our chamber, go to our website, davischamber.com. It's a great source. You can follow us on Facebook. We got a very active Facebook page, or get involved, volunteer, be on a committee, help us clean up downtown or, parts of the city. There's all kinds of things that you can do. And frankly, I think you have a responsibility, not just to open a business, but be part of the community that you're in. If you're in Davis, we're a very unique community. You've got to be part of the Davis community because that's a big part of being a business owner. So, John, I'm going to turn it back over to you. I really appreciate this partnership. I've had a number of folks say that this has been a very important and useful series of classes. So great job. And I hope we can do something like this again. But John, back to you. Thanks for having me.
Well, Corey, thank you very much for working with SBDC to sponsor this series. I do hope it's been helpful. I hope today's session will be helpful. And I really appreciate the work that you do in Davis. And I just, because before we started, when the two of us were on, a couple other people were on, we were talking about Picnic Day, which is a wonderful event in Davis. And I didn't know what a mess it was downtown afterwards and how much work the chamber does to clean that up. So that's great news. I wish I'd known about that a few years ago when between the ages of 6 and 9, my son was in the recycling business, and he would have gone to town with recyclables at downtown Davis. I can tell you that. So thanks again for your participation and help. So let me go over to my slideshow here and get started. I'm going to share the screen. And here we go. Okay, so the topic today, this is the second and last financial topic that we're going to be covering. And it's also the fifth and last session that we're going to be holding in this series. So I want to thank everybody for their participation. I do recognize several names on the list, people who I think have been here every time or almost every time, and that's great. It is a little odd for me because I don't actually see people or hear people, but it's great to interact with you as we go through this. So as I said, this is, let me get something out of the way here and move on to the next slide. Doesn't seem to want to go. There we go. Oh, the disclaimer, right? Basically, I'm not a lawyer, I'm not an accountant. And so, you need it. This is general advice about financial and maybe legal issues. And if you want specific advice, you need to go to a lawyer or an accountant, right? And the SBDC and me say we're not liable for any use you make of this information. Okay, so like I said, fifth and last series in the series. So this again is going to be financial management for your business. So financial education for entrepreneurs is very important because obviously making a profit or not having a loss are very important things for entrepreneurs. And so that's why we're actually dedicating 2 of the 5 sessions to this topic. So today's agenda is really simple. What we're going to do is we're going to talk about some certain financial realities for small businesses, especially sort of, in the coming out of COVID phase. And then we're going to talk about the 3 most important financial statements that you need to know. We're going to give you some examples, give you a chance to work on them a little bit today. And those are the income statement, sometimes referred to as the statement of profit and loss, the balance sheet, and this cash flow statement or the statement of cash flow. Then we're going to talk about some financial concepts that it's important to know, and some strategies to improve cash flow. So I think that's pretty much our topics for today. And the objectives are, by the end of this course, you're going to be able to have a basic working understanding of the 3 most important financial statements for a business, working knowledge of key financial concepts and terminology, and tools to improve cash flow. I don't know if I mentioned this before, but maybe in the other financial session, but I had this friend years ago who was the president of a nonprofit organization. Sky might appreciate this. And she decided she'd get a certificate in nonprofit management. And one of the courses she took was, accounting for nonprofits or something like that. And she told me that the first day of class, the accounting professor said, the purpose of this class is not to teach you how to be an accountant. Is to teach you how to defend yourself against your accountant, or basically to know enough that you can have, an intelligent conversation with your accountant. And hopefully that will be a part of the result of today's class. So, and let me see if there's any questions, or if you have any questions for me, please put them in the Q&A, and either Gwen or I hopefully will see those, and I'll try to answer them. And then if you have any other thing you want to write, please put that in the chat. And I'll ask you from time to time to put some things in the chat. Okay, so we're going to talk about financial realities for small businesses. And I just want to make sure, because I've been talking for a while, I just want to make sure, Gwen, can you hear me? Just want to make sure I'm audible.
Yeah, you sound great.
Okay, terrific. Okay, so like I said, we're going to talk a little bit about businesses coming out of the pandemic, right? So what it says here is that, businesses open and close all the time, but there was an estimate that COVID resulted in 200,000 small business closing more than usual, right? More than in that period of time, more than usual. So that was a big hit for small business. Big hit, not like a big hit on the music charts, but a big hit like a bunch
Hey, John?
of gut. Yes.
Really quickly, we do have a couple comments in the chat
Okay.
about the issue with seeing slides.
Oh, are people not seeing the slides?
Apparently not. It looks fine from my screen, so I'm not too sure.
Yeah, I don't know what to do different. I'll go ahead and what I'll do is I'll stop sharing and I'll start sharing again. And that's the only thing I can think of to do. I see that there was a raised hand. Did somebody have? No, I can't remember. Can people? Can we hear people if they talk or not?
No, I'm pretty sure it's
Okay. Okay. So it says one person says, please fix slide view. Another one says, okay, slides are okay now, says Cheryl. So anybody else still have a problem with slides? If so, put that in the Q&A, please. Okay, so let me go back. I'm not going to go through point by point, but I'll just, got to show that disclaimer, right? Too quick to read, but you've seen it before. So again, that's the agenda. And those are the objectives. So here's where we were before. Financial realities for small businesses. And lots of small businesses closed because of COVID. So we need to think about, the decisions we make, right? Every decision we make will impact, the financials of your business, right? And your very survival as a company will depend on your knowledge of how to manage money. Because if you run out of money, you run out of business. I mean, I used to work for Chiquita Brands International. You know, it was a Fortune 500 company at the time, multi-billion-dollar company. And they basically ran out of money. They made a bet on the European market, which they lost. Things went a different direction than they expected. And they had put out, they borrowed a lot of money to increase capacity to meet the demand that they expected from the European Union. And when things went south, they ultimately couldn't pay not only the principal of their loans, but they couldn't pay the interest. And when you can't pay the interest, then your creditors become the owners. You go through bankruptcy and the creditors become the owners. And so very, very important to manage all of your decisions, not just your financial decisions, but every decision, partly thinking about how is this going to affect the, you know, the financial bottom line of the company. So what the advice here is, you know, when your money situation is the worst and you want to run and hide, don't run and hide. It's the time you need to up your game and lean into it, right? So I have another example for you. I used to work for a nonprofit, and we had, unbeknownst to us, we had a bookkeeper who was an alcoholic. Now, her alcoholism did not directly affect the business, but it affected it indirectly, because something that alcoholics and addicts tend to do is to hide bad news. And so when the nonprofit, it's not like she took any money or anything, but when the nonprofit started to run out of money, she hid the bad news. She didn't tell anybody. And then one day I went into work and the director said, we're out of money, we're all laid off. So it's very important that you stay on top of the money, that you know what your financial situation is. And if you have a problem, to deal with the problem, or even try to prevent the problem before you had one. We're going to talk about some ways to do that as we go along. So let me ask, is there anybody who was in business 3 years ago and the pandemic affected you? So if you were and in business 3 years ago and the pandemic affected your business, please say yes in the chat. So I don't see any yeses, but still lots of these questions are going to apply to you. Oh, we might have gotten a yes. Let me see if we did. Yes. Oh, regulations. Okay. Yeah, that's another thing. So one of the factors, right? There were, you know, like if you had a restaurant, you couldn't let people in the door, or you had to cut back on the number of people you could let in the door, right? Or you had to be able to, you know, deliver or have drive up or curbside pickup or something like that. And I think we have one more comment there. Oh, right. Pet care wasn't needed because nobody traveled, right? And some people were furloughed. So they were, some people were affected because indirectly because their company was affected. Okay, so, but even whether you're affected by the pandemic or not, still, if you're starting a business, or you have a business, you may have questions like, well, when can or when should I open my business? You know, when should I have a soft opening, which means you're open, but you haven't really announced it yet. You're like having some customers and getting feedback. I was very fortunate. There's a brand new coffee shop down the corner of my block. And they had a soft opening and they didn't tell anybody, but the door was open and they had the sign said open, and some people walked in and I walked in and they gave me hot chocolate and I said, how much? And they said, no, it's free till the hard opening. Great. So glad I came, right? So then the hard opening or the grand opening is when you actually tell people, okay, we're open now and things are as close to normal as possible. And the value of the soft opening is that you can get feedback from customers before you start actually, being concerned about reviews and things like that. Same thing, if you're in a business and your business had dropped, your question is how quickly can I get back up to full operation? Okay, so how much business will come in? When you're starting, you may have a goal of X number of thousands or millions or billions of dollars, right? But the question is, in the first month, the first 6 months, the first year, how much of what you are expecting your maximum income to be, how much of that's going to come in. Okay, so what about these couple questions here are very specific pandemic related. But in any case, you're always going to be thinking about, your lease, any temporary problems that your business affects your business, your lease. What are you going to do with employees? If business goes up or down or whatever. What's going to happen to your hard costs? Like things you have to pay every month. What's going to happen if you have less income one month? Things like that. Oh, and then so this last one's really very pandemic related, so probably not related anymore. So now the big section we're going to be spending our time on is the 3 financial statements, because these are the ones that you need to know. You may or may not do them yourself, but you need to know what's in them, how they're done, and what they mean. So we're going to cover these in some detail. So the first one is the income statement. Seems like that's okay. The first one is the income statement. So this is a core financial statement, meaning it's one of the 3 that shows profit and loss over a period of time. Now that's that's why it's, in addition to sometimes being called the income statement, is sometimes called the statement of profit and loss. So we're going to explore this. I'm going to give you, you're going to get this whole PowerPoint or links, either the PowerPoint or link to the Google Doc. And so you're going to get all these links, but I do want to show you them, and I'm actually going to give you some of them in the chat as we go along, ones I want you to do something with. So we're using resources from CFI. I think it's I forget what, Corporate Finance Institute, and they've got lots of information here about the income statement. And one of the things you want to understand here is that it covers 3 things: revenue, expenses, and profits or loss. So that's why it's called income statement, because that's revenues, profit and loss, because it has to do with profit and loss, right? That's what it is. And the other thing I want to show you, and again, you'll get this link with the slides. The other thing I want to show you is a short video which explains it. Please, I think there's a robot voice in there, so you don't mind. Oh, and I have to stop sharing, share again, because I have to make sure that their sound is enabled. And if you don't hear it, let us know right away, and in Q&A or chat, and we'll try to fix it. So here we go.
Now let's look at the income statement. The income statement can also be referred to as the statement of operations, or the statement of profit and loss, which is sometimes shortened to P&L. When you think about all of the transactions that a company records during a period, you can see why it's necessary to have a statement that's dedicated just to the operations of the business. While in theory it could be possible to record everything on the balance sheet under retained earnings, we realize that really it requires its own statement to keep track of all of the income, all of the expenses, and all of the resulting profits or losses. Let's look at the income statement in more detail. The income statement starts at the top with revenues. Revenues can also be called sales or turnover. It represents the income that a company receives for selling goods or services. Below revenues, we have direct operating expenses, such as purchasing inventory. This line is often called cost of goods sold or cost of sales. This is the first expense line on the income statement. After deducting cost of goods sold from revenue, we arrive at our first subtotal on the income statement, referred to as gross profit. Gross profit is equal to revenue minus cost of goods sold. If we take the gross profit and divide it by the revenue, we calculate the gross profit margin. Next on the income statement come the indirect operating costs. These include things like research and development, administration, selling, and distribution. Several of these line items may be grouped into one, sometimes called Selling, General, and Administrative Expenses, SG&A, or just General and Administrative Costs, G&A. If we take revenues and deduct the direct operating costs and then deduct the indirect operating costs, we arrive at the next subtotal, operating income. The terms profit or earnings can be used interchangeably with income. Operating income is often referred to as EBIT, which stands for EBIT, earnings before interest and taxes. Below the operating income line on the income statement, we can then deduct the cost of debt financing. This includes interest expense and bank charges. After deducting the cost of debt finance, there is often another subtotal for earnings before tax. Below that, taxes are deducted, and finally, we arrive at net income, the bottom line. Net income can also be called net earnings or net profit. This is the bottom line of the income statement, which then feeds into the retained earnings account on the balance sheet.
Yeah, I hope that was a helpful explanation. I want to give you some examples of income statements. So this is one you can see as the voice was telling you. You have revenue. In this case, it all came from sales. There could be other kinds of revenue, but this came from sales. Then the cost of sales was the cost of goods sold. That's like the direct costs for making your product, right? And then you end up with the gross profit by subtracting cost of sales from revenue, and then your operating sales. You had some fees, you had some equipment, you had to buy some equipment, you did some marketing, some advertising, etc. And so you had to take that out, and then when you get all done, you made, in this particular example, there's $40,000 of net profit. So I'm not going to go down each one of these, but there's lots of different ways of doing it. You can do it like every month, and here's all the different things you could put. And then here's another example, right? These are all different ways that an income statement can look. Here's one, Paul's Plumbing, right? Made $2,000. Here's an income statement for another company. They made $91,000. And here's for a restaurant, and they made, so they lost money the first 2 years, and then they made money the third year. And here's another one. So these are all examples that are going to be in the slides when you receive the link or the document. I see there's a question. Yes, absolutely. And Sky asked, are there software programs for generating these statements? The answer is yes. And I'm going to show you a couple of them just a little later today. Okay, so there's only 3 levers you can pull, right, that make an effect on the income statement. One is revenue, cost of goods, and this is a subtotal, right? And another lever you can pull is expenses. So how much money comes in, how much money it makes, how much money it costs to make your product or service, and then what your other expenses are. That's what you can do. Those are the 3 you can control, and the result are your gross profit and net operating profit. So I want to talk a little bit about financial management for your business. So you'll see over here, there's a trend, right? You can see that, sales go up and down, but there's a trend over time. It seems to be going up a little bit, but, who knows what's going on at the end here. So I want to talk about some concepts you need to keep in mind when you're managing the finances of your business. So one of them is a trend analysis. You want to know, is the trend in your sales or your profit or whatever going up, staying the same, or going down? Hopefully it will be going up. Another thing you want to take a look at is the variance analysis. So how much does it vary from day to day, week to week, month to month, year to year, whatever? What's the variance, right? And then another thing you want to take a look at is year over year. Are you making more money than you were last year, or more money this month than last month? And then you want to look at seasonality. are you doing better in the summer? Are you doing better in the winter? Are you doing better, whatever, right? So in fact, I've often thought it would be really good for a business to have two products. Sunscreen, of course, because I'm in the sunscreen business, and umbrellas. And umbrellas not to keep the sun off, but to keep the rain off. So in the winter you sell umbrellas, and in the summer you sell sunscreen. But in most businesses, and then maybe that would all balance out. But in most businesses, or many businesses, there's more business in a certain time of the year than another. My understanding is that more people join gyms in January than any other month, and they don't go, right? And so that means that they got to make more money in January to make it through the end of the year if people are not going to stay with them. Okay, so we're going to talk. Yeah, was there something?
Yeah, we have a quick question.
Uh-huh.
Someone wants to know if there's any software programs you recommend for generating statements.
Yes, there are, and I will talk about them shortly. I answered that question earlier, but maybe can everybody hear me? Okay, can you hear me?
So that might have just been my audio. My bad.
Okay. Okay, so gross profit is your total sales minus your cost of goods sold. Cost of goods sold, again, is the direct cost of producing the goods which are sold by a company. It includes materials and labor that are directly used to create the good. It excludes all other expenses. And then net profit is your total sales minus your cost of goods sold minus all the rest of your expenses, which are overhead. So that's your net profit. So one of the things we want to take a look at is restaurants, because restaurants are a very popular business. So it asks the question, why are restaurant and food business profits so low? Well, the main costs are labor, food, and overhead, right? And we're going to take a look a little bit later about the main costs for all kinds of businesses and some ways you can reduce those costs. Because, you can only bring your revenues up so high. It's sort of like I think it was Ben Franklin who said a penny saved is a penny earned. Thing is, if you can cut your expenses, that's much easier than increasing your revenue, because it costs money to get a new customer, but it may not cost money to cut your expenses. And it may not even reduce your revenue. So it's good if you can do it. Okay, so I'd like to do a brainstorm now. Anybody who's already in business or you have some knowledge about this, just type in the chat your ideas. How can you increase revenue in a small business? Let's see, we've got one. So decreasing costs does not directly increase revenue. I think, let me go check and see if I'm looking at the right thing here. 1 second. Where did that go? Sorry. I lost my screen here. Just give me a second. Let's see. Not seeing my, oh, there it is. Yeah, sorry. The question is, how do you increase revenue? So your revenue, by cutting costs, does not increase your revenue. It can increase your profits. What I want to know is, how can you increase your revenue? So somebody said, let's see here. Cheryl said increase marketing. That can absolutely increase your revenue. Add new products, because if you're selling one product now and you sell 2 or 3 or 4, then you can make more money. Somebody else said marketing. Expenses. So I'm not quite sure the connection there, but you can increase your customer base. So in other words, you maybe have the same products, but you get more customers, or you can increase your prices. Yeah, lead generation. If you get more leads, that can be good. And somebody else said increase prices. So those are, in fact, all ways to do that. Okay, so next concept here. So somebody talked about you can increase your prices. You can. You may not be charging enough for your product, or you might be charging too little. Of course, you want the Goldilocks solution, right? You want to charge just the right amount. So the thing is that what you want to do is I think this is on the next slide here. You want an optimal product service mix to maximize revenues and profits. So if you sell something, if you sell 10 widgets for $10 a piece, you'll make $100. But if you sell 20 widgets for $8 a piece, so you're charging less, but you're selling more. So now you're making more revenue. Now you still have to see, take a look at what your cost of goods sold is, because maybe you can't afford to sell them for $8. But if you can, and if you can sell more by selling them for less per widget, then you're going to make more money. So I want to talk a little bit about volume versus profit margin. So there's something called the economy of scale. So when I worked for Chiquita, this was a concept I learned. It was not just no longer a concept I learned, but it was actually a real thing that the company was doing. So in the banana market, you make your money in bananas in Europe, because when you think about the US market, bananas are a fruit and they compete against other fruit. So but fortunately for the United States, we have a ready market of fruit all year round, because we have lots from California and Washington and some other places in the summer and the fall. And then in the winter and the spring, we've got lots of it available from Chile. But Europe doesn't have that advantage, because goods from Chile getting to Europe are very expensive. You either have to go through the Panama Canal, or you have to go all the way down around South America and back up again. Very expensive in either way. Much easier to ship straight to LA and then ship all over the country from LA. So you don't make much money from bananas in the United States. In Europe, back when bananas here used to be like 50 cents a pound, in Europe they were like $2 a pound. And by the way, Germany has the highest per capita banana consumption in the world. So number one, you got lots of people eating lots of bananas, and number two, the price is very high. So the question would be, why would Chiquita bother, and the other banana companies bother, to even sell in the United States and in North America, when they're not going to make very much per banana or per pound or per box? It's for economy of scale. The more of something you make, the cheaper you're going to be able to get your raw materials, fertilizer, cardboard boxes, et cetera, right? So that's the reason why you want to try to have a big profit margin. The big volume. The other value of having big volume is that if you have the most market share, you're probably also going to be making the most profit, because you're squeezing out a lot of other competitors. Chiquita, 100 years ago, had 90% of the world export market on bananas. Now, since then, companies like Dole and Del Monte that were in pineapple and vegetables, they said, gee, there's a lot of money to make in bananas. We're going to get bananas. So now there's several companies that have got about 20% a piece, and a few companies have got about 5%. But again, volume and economy of scale are very important to maximize your gross profit and net profit in certain senses. So let's talk about types of expenses. So there are fixed expenses. Fixed expenses are the ones you have to pay every single month. It doesn't matter how much you sell, your expenses are going to be exactly the same, right? Your rent, for example, if you have a lease, your payment every month is going to be exactly the same. And maybe you have a certain number of employees, and maybe there's a labor union, and maybe you can't lay them off, whatever. And then so you got to pay them whether they're making anything and selling anything or not, because they're on your payroll. You got to pay them. Those are some, your insurance, things like that are fixed. Every month you pay the same amount. Then there's variable expenses, and those vary primarily with volume of business. So the more you sell, the more costs you're going to have that are related to those sales. But that's okay, because you're making more sales, and hopefully you'll make more. Then there's capital expenses. So if you're going to buy a building, if you're going to buy a vehicle, some major expense that you wouldn't do normally, even maybe even in one every year, that would be a capital expense. And then finally, operational expense, and this you'll see this overlaps with some of the others. It's an expense that businesses, and I have to hide something here, businesses incur through their normal operations. That includes rent, equipment, inventory, marketing, payroll, insurance, etc. So you see there's some fixed expenses, some variable expenses. And again, so these are not to be exclusive. Fixed and variable are. Capital is only because it's kept in a separate part of your spreadsheet because it's a major expense and it's only once in a while. But this operational expense includes a lot of different things. Okay, so what I want you to do is I'm going to put this in the chat. I am going to put it in the chat 1 second. I share it. Copy the link. And what I'd like you to do is to spend a few minutes putting in, if you are in business already, I want you to put your numbers for March 2023 into this, to make sure this goes to everybody. Here we go. Into this spreadsheet. So again, if you're already in business, I want you to put the information about March 2023 into the spreadsheet. And if you're not in business, I want you to estimate what you think the information would have been for March 2023 if you were in fact already in business. So let me just see if there's any questions about what I'm asking you to do. COVID is not over, by the way. 2 of my 4 business partners have COVID right now. And there's somebody else. Oh, one of my neighbors just asked for a COVID test. So it's not done. It's not done. Okay, I don't see any questions. So hopefully people are doing that. What I'm going to do is I'm going to give you 5 minutes to put that information in, and I'll check in and see if anybody needs more time. And again, if you have any questions about the template or you couldn't get the template, please say in the chat what your concern is so I can try to address it. You cannot download it. Do you mean you can't open it? Or you can't type in it? Okay, let me put that in there in the chat again. One person said they didn't get it. Well, you can't type it. Yeah, you have to make a copy of it, and then you should be able to type in it. If you make a copy and you can't type in it, then please let me know. Okay, what is COGS? That's cost of goods sold. So those are the costs of providing the service, right? So for example, you have an employee who's providing that service. So the employee's salary would be an example of that. Rent is not a cost of goods sold. Rent is another kind of expense. And again, you don't need to do it all today. Can't do everything in March today. That's okay. I just want you to at least get started and think about how to do that. So we've got another almost 2 minutes left for people to work on it. And if you're done, type done in the chat and we'll see if everybody says they're done. Okay, so the question here is, if a sole proprietor is providing the service, what will the cost of goods sold be? So thanks, Latoya, I see you're done. So Sky, so there's something called the owner's draw. And so what is recommended is that you basically pay yourself the equivalent of a salary. It actually could be a salary. If you are the sole proprietor, because you don't want to be in business just to cover your expenses. You also want to make money from it, right? So there's that. So about 1 minute left. Okay, so how many people were actually put yes if you were able to at least type in part of your March expenses or estimated March expenses if you're not in business yet? Okay, so we have at least a few people who were able to do that. So hopefully that was helpful. Actually, we had several. Okay, moving on to the next part. So so we're done with income statement. So just want to check and see if you have any questions at all, please put them in the Q&A. Okay, so now we're going to talk about the balance sheet. So this is another core financial statement, meaning that it's one of those three, which shows assets, liabilities, and equity. And just like the income statement, there's a CFI page about it. And this is what's referred to as the accounting equation, which is total assets minus total liabilities equals total shareholder equity. So total assets needs to equal total liabilities, what you owe, and then what's left is your equity. So there's that resource, which you will get a link to. And now we're going to play another video very similar to the last one, but this time about the balance sheet. Oh, have to make sure.
In order to understand what makes up a balance sheet,
I'm not certain I had it shared on sound anymore, so I need to make sure I do. Just 1 second. Looks like it was. So here's the video.
In order to understand what makes up a balance sheet, we need to define a number of terms. Let's begin with the asset side of the balance sheet. Assets are things that a company owns. This includes cash in the bank, furniture in the office, and equipment and technology that's used to create goods or services. Assets are organized into two groups. The first is current assets. Current assets are assets that are expected to be used within 1 year's time. They include things like cash, inventory, and accounts receivable. The second category is non-current assets. Non-current assets are expected to last more than a year's time and include things like property, plant, and equipment, technology, patents, trademarks, etc. Non-current assets are typically grouped into two categories: tangible and intangible assets. Tangible being those that are physical, like property, plant, and equipment, and intangible being those like patents and trademarks that are not physical. By totaling the current assets and the non-current assets, we arrive at the total assets of the business. This forms the left side of the balance sheet, which must equal the right side of the balance sheet. Moving on to the right side of the balance sheet, we have two categories: liabilities and shareholders' equity. Liabilities are what the company owes. And just as with the asset side of the balance sheet, those liabilities are broken down into current liabilities, those that are due within 1 year's time, and non-current liabilities, those that are due in more than a year's time. Current liabilities typically include accounts payable, which is the amount owed to suppliers. Whenever a company purchases something on credit, it results in accounts payable. Most suppliers provide anywhere from 30 to 90 days as their terms for payment. So a company will have an accounts payable balance that is expected to be paid off, typically within 30 to 90 days. On the non-current liability side, things like long-term debt, which would be any loan that's due in more than a year's time, are recorded here under non-current liabilities. By adding together all of the company's current liabilities and all of its non-current liabilities, we arrive at the total liabilities line on the balance sheet. The shareholders' equity section is what the business is worth after all liabilities have been paid off. At the beginning of a business, the shareholders' equity is equal to the amount that's initially invested in the company. This is referred to as shared capital. The investors get common shares in exchange for providing money or capital to the business. Then, over time, the balance can go up or down as the company either earns profit or records losses. If the company produces a profit, that net income flows into shareholders' equity as retained earnings. Those earnings can be retained and remain on the balance sheet, or they can be paid out in the form of dividends, which reduces retained earnings. If losses are generated, those also reduce the retained earnings account. So retained earnings is essentially a running total that shows how much profit the company has generated, less any losses, and less any dividends that have been paid out. At the end of the day, the total shareholders' equity value must be equal to the total assets minus the total liabilities.
Let me close that. Okay, so I want to give you an example of a balance sheet. Here we go. So assets, like they said, liabilities, and equity. Very simple. Right? And you may have a number of different assets, a number of different liabilities, a number of different kinds of equity, right? So here's an example, a more specific example, right? More detailed. So you have cash that you have like in petty cash, and then you have cash in the bank. You have a certain amount of inventory that you can sell. You've already paid some expenses in advance, and some people owe you money. So those are your total assets. And then you have fixed assets. You don't have any land or real estate, but you do have some, office equipment, for example, kitchen equipment, and other assets. This looks like a restaurant. They got $250,000 of that. And then here's your liabilities. So these are the current ones. You can see a long list of those possible current liability stuff you pay every month. And then long term, you might have a loan that you got in the beginning to start your business. So those are your liabilities. And then that was odd. There's something odd about that. It didn't show equity. So I'm a little concerned about that. But let's go take a look. I'm going to go ahead and give you another one. This is going to be a balance sheet template that you can use. What you need to do is make a copy of it. And once you make a copy of it, then you should be able to type in it. So I'm going to give you that. Give me 1 second to get something out of the way here. Share it. Copy the link and come back over here. I'll put it in the chat. So if you would open up that document, make a copy of it, and then put your information for 2023 for your business into it. If you're in business, do it for that. And if you're not in business, then please type estimates. And I'm going to go ahead and take a look at it. So as you can see, it's got assets, which includes current. And here they only have current assets. They don't have any. Oh, here's property and equipment and then goodwill. Goodwill, by the way, is an intangible asset. It's basically your reputation, your brand, customer loyalty, etc. But that can be, you can quantify the value of that. And then your liabilities, including both current and longer term. And then finally, what should be at the end here would be your equity. So I'm going to give you about 5 minutes to put information in there. Let me check if you can't get it or you can't. Yeah, okay. How do you quantify the value of your brand? That's a complicated question. That's more than we can talk about today. But I'll tell you what. I will put my email address in the chat. And if you want to send me that question, I'll get you some information to answer it. And if you have any other questions you want to follow up with, you can do that as well. So I'm going to put the timer back on. And again, if you cannot access the document or you cannot make a copy of it and then type into it, please let me know. So again, just put in the information for 2023 based on what you think at the moment, if you're in business, or based on what you can estimate at the moment if you're not in business yet. So about 2 minutes left. You don't have to put everything in, but please put in everything you can either know or can estimate. One minute left. Okay, so let's go ahead and move on to the next piece. Make sure I didn't miss anything. All right, here we go. Okay, so the last core statement we're going to talk about is the cash flow statement, or the statement of cash flow. It shows the net inflow and outflow of cash. So again, CFI has a web page about that. And as you can see, you can download it for them, or when you download it for them, you're going to get the same thing you got from me. So either way works. And so there's all the different aspects of the cash flow thing and what it break it down. I like how they break these down in pretty simple form. So there's your operating activities, your investing activities, and your financing activities. So it has to do with the money that goes in and out, having to do with operating the business, any investing that you do, and any financing that you do. So if you get a loan, then the money comes in, and then you have to be paying the interest and principal every month. And of course, we have another video, probably pretty similar to the other ones, but in this case about cash flow statement.
In theory, it is not necessary to have a cash flow statement, as all cash items could be recorded on the balance sheet directly. However, in practice, that is not practical, and only the closing cash balance is shown on the balance sheet, while all other details are shown on the cash flow statement. Understanding where cash comes from and how it is being used is very important for managers of the business, for financial analysts, and for other users of the financial statements. The cash flow statement organizes cash inflows and outflows into 3 categories. The first is operating activities. The second one is investing activities. And the third one is financing activities. Let's take a closer look now at cash flow from operating activities. This includes items that are found on the income statement, such as revenue and operating expenses. However, it only includes them if the cash payment actually occurred in that period. So, for example, it just includes revenue that the company has actually received the cash for, and it just includes expenses that the company has paid out the cash for. So, it's similar to the income statement or statement of operations in that it reflects revenues and expenses from the period, but it's different in that it only reflects them if actual cash movements occurred during the period. Now let's take a closer look at the cash flow from investing activities. Investing activities include things like purchasing property, plant, and equipment, or selling those assets, as well as making investments in other businesses, or acquiring or divesting of entire businesses. This is where a company records its capital expenditures as well as M&A activity. If we take the cash flow from operating activities and we add the cash flow relating to investing activities, then we arrive at the net cash flow before financing activities. The final category on the cash flow statement is cash flow related to financing activities. This is very distinctly different from operating and investing activities. This includes things like issuing shares, raising new debt, repurchasing shares or repaying debt, as well as paying dividends. Finally, if we take the cash flow from operating activities, add the cash flow from investing activities, and add the cash flow from financing activities, then we finally arrive at the net cash movement over the period. This is the total change in cash position for the company.
Okay. Oh, how did that happen? And here's an example, right? So this is for a little popsicle stand, right? So they had 1,200 cash at the beginning. They made $1,000. They have I don't know why it counts. I don't quite understand this part right here. Something is confusing to me. Seems like it'd be opposite. But then they purchased something, so that cost them money. And they had, they got a bank loan, so they ended up with $2,200 in the bank at the end. Okay, so I'm gonna give you one more time. I'm gonna give you a chance to fill in a cash flow statement. Hold on, let me close this. Give you this. Here's the link. Copy the link. So if you would, I'll put it in the chat. Yeah, investing activities when you're buying and selling things, equipment, for example, because you're investing in the equipment, and then of course, if you end up selling the equipment, that's an example. Then you would, or you buy a part of a business, you sell a part of a business, you buy another business, you sell it. Those are all investing activities. That was a question somebody asked, and I'm going to give you that link there to the cash flow statement template. Please make a copy of it. And then if you are in business, go ahead and put your information in about 2023. And if you're not in business, then please estimate what you think it would or think it might be for 2023. If you can't access the document, or you can't make a copy, or you can't type in it once you do, please let me know in the chat or the Q&A. There are about 2 minutes left. I see we have something in the chat. Nicholas, I see you have a long question in the chat. If you would, just if you would please just include that with that email you're going to send me about the value of a brand. Thank you. Okay, 1 minute left. Okay, that's time. And hopefully you've had enough time today to at least get started even if you weren't able to finish these, these three things, to just get started thinking about how you would get your information together to do them. And again, probably useful to work with either a bookkeeper or an accountant, depending on how complicated your financials are and what you have to do with your financials, like if you have to give them to a lender or anything, or an investor. Okay, so if there's any questions about those three statements, please put them in the Q&A now. And while you're doing that, I'm going to go on to the next part. So we're going to talk about some financial concepts and how they can be important to you in a small business. So everybody has a role in the money, right? So first of all, you may do your bookkeeping yourself, or you might hire a bookkeeper. So that's one possibility. So basically, the bookkeeping role is just to put everything in the spreadsheets, right? Your role is not to analyze things, it's just to put them in. The job of analysis is for a certified public accountant. There are also private accountants, and those are people, or they're sometimes referred to as management accountants, and those are people who are accountants, but they work inside of businesses. They only do work for that one business that they are an employee of. And so if you want to be able to do accounting for the public for all kinds of businesses, then you have to be a CPA, and you have to get a CPA license. And they're the ones who do the analysis. So they can also do an audit, for example. And then the owner needs to know enough about what's going on with the financials of the business so they understand what's happening financially and what, if they need to take action. And they're the one. So let's say you have all three of these. You're the owner, you hire a bookkeeper, and you hire a CPA. So the bookkeeper puts, you have receipts and, expenses, you have all your invoices and all that kind of stuff. And you give that to the bookkeeper. The bookkeeper puts it all in the spreadsheets, at least those three documents that we talked about. The CPA does an analysis of them and may tell you, you're doing really well, or, this one particular part of your business isn't doing so well, or it looks like you're running out of money, you better do something quick. And of course, the owner's role is to decide what to do based on what they learn from those financial documents and the analysis of the accountant. I might have told this story before, and if I did, please put in the chat that I already told you and don't have to bother with you again. But the business school I went to at Case Western Reserve University is called the Weatherhood School of Management, Weatherhead School of Management. It's called that because Alfred Weatherhead gave a whole bunch of money to the school to name the management school after him. And the reason he did that was because the dean, who is an accountant, the dean at the time, who was an accountant, the two of them, this is in Cleveland, Ohio, and there's a beach because there's a lake, right? And the marketing for Cleveland is America's north coast, because that's the only Great Lake that runs east-west, and so you could sort of say that's the only north coast we have in the United States, unless you count Alaska or Hawaii. So at any rate, the two of them are walking down the beach, and Weatherhead says to Cowan, Scott Cowan, his accountant, I think I want to go ahead and sell my business. And Cowan said to him, don't sell now, I'll tell you when to sell. And so he followed the advice of the accountant and he waited. And then when the accountant told him to sell, he made a whole lot more money than if he had sold earlier. And he decided it would be a really nice thing to give a whole bunch of money to the university to name the management school after him. So that's the role of the accountant. The role of the accountant is to give advice, but ultimately it's the business owner that has to make the decisions about what to do with that advice. So somebody asked about accounting programs. Probably the most popular one is QuickBooks. And when you get this, you'll get links to all of these things. So here's QuickBooks, right? That's a very, very popular one. There are others. One of them is called Bench, but there are a number of them. So there you go. You can decide what one's best for you. And then there's some planning resources. So the Service Corps of Retired Executives, which is another small business administration program. sort of like a sister organization or brother organization to Small Business Development Center. All of their services are free. And actually all of the people who provide advice and training through SCORE, they don't get paid, they're all volunteers. And then Live Plan is another resource. This one I think costs you money, pretty sure. Yep, pricing, there you go. So this is how you can make a great business plan, and you can pay them $15 a month or $30 a month, or like that. Okay, let's see what else. But it's all about what goes into the financial statements in the first place, right? Same thing with computers, garbage in, garbage out. And so here the little cartoon says, yes, sir, you can absolutely trust those numbers. And then you got the person crossing their fingers behind their back. So just make sure everything that goes in is accurate, and then everything that comes out will be accurate. You may have heard of a famous legal case, which is going on right now, which had to do with whether or not the information that went into the system was accurate or not. So you want to make sure you get your information in accurate. You don't want any problems if it's not. And you want to review your financial information on a regular basis. You don't want to just do it, like once a year, because things might get out of hand. So you may not need to do it every day, but certainly every month or every quarter, maybe every week. Depends on the nature of the business, right? And how much your revenue and expenses vary over a period of time. So the last thing I think we're going to talk about is strategies to improve cash flow. So here's the top 3 rules in business, at least when it comes to finance. Number 1 is never run out of cash. If you run out of cash, you're out of business. I told you the story about Chiquita. They not only could not pay the principal on the interest, but they couldn't pay the principal of the loan. They couldn't pay the interest either. They ran out, their expenses were higher every month than they could possibly pay, so they had to go through bankruptcy. So rule number 2 and 3 are the same as each other, because they are, remember rule number 1, never run out of cash. Because if you run out of cash, you can't pay people, you can't pay the rent, you're out of business unless you can find some more cash. So I want to do a little brainstorm, and please put in the chat. Let's see, we have something in chat. How do you decrease? What are some ways you can? What are the things you can do to decrease expenses in a small business? So Nicholas asked, in the startup phase, how often do I need to check the numbers? Again, it depends on the business. If it's something where you're taking in money every day, then you might want to check it every day. But if you operate on a monthly calendar, you have clients and they pay you once a month, then maybe you only need to check once a month. It really depends on the nature of the business. So I asked the question, what are some ways to decrease expenses, to lower your expenses? We have some already. We have reduce your workforce. Whoops, got a lot of them now. Let me catch up here. Decrease your rent, move to a different location that costs you less money. You might want to have just a minimum staff. And it says something as needed. Oh, I see. That was related to the other question. Change your suppliers. Maybe you can contract with somebody who costs you less than your current suppliers. Or you can do things yourself that you were otherwise paying for, or you can negotiate better repayment terms. Bare bones operational costs, you cut the fluff, right? Take out all the fluff. Okay, great answers. So let's go ahead and take a look at some things you can do. So the first thing is you can eliminate expenses. If there's any expenses you can eliminate that will not reduce your revenue, then you should probably consider doing that. Second of all, you want to reduce your expenses. So there might be things you can't completely eliminate, but maybe you can cut them down. And the things you can't eliminate or cut down, see if you can get more value out of them. Maybe there's some way that you're let's say you're locked in a lease. It'll cost you too much to get out, but maybe you can get more value by putting a great big banner up above your door or something like that, right? The banner won't cost you very much, but now you get more value out of your location. That might be an example. There's something in the Q&A. You will get a copy of the slides in terms of the transcript. Somebody is getting one of the participants is getting a transcript. And so that person, if you would please put your, I think you had some kind of link. I think you have some kind of link that you put in there where people can get the transcript. But we will make the video available to you, or the slides and the video available to you. Okay. Okay, so now I want to get into some details about cutting expenses. So when you're eliminating or reducing your expenses, start with the largest line items first. So I want to give you 7 of them, and you'll get this link with the slides. So these are the top, in general, the top small business expenses and how you can reduce them. So I won't get into the how you can, the way to reduce them, but labor is usually the most expensive. Vehicles are expensive. Supplies, rent or mortgage, utilities, insurance, or taxes. So these are things that if you want to think about eliminating or reducing your expenses, these are probably not for every business, but for many small businesses, those are the ones you might want to start with. And you will get this link. So the cash flow game, so the rules of that game are simple. You want to pay at the very last moment. So if somebody gives you net 30 days, pay it on the 29th or the 30th day. But if somebody owes you money, try to get it as soon as possible. Because if you can keep getting in your accounts receivable right away and paying your accounts payable at the last minute, that can help you not run out of cash. Okay, I'm going to answer there. And then let me go on to the next one. Okay, now this one I think this one worries me. This slide deck was given to me. I did edit it and sort of tweak it a little bit, but it says it said here, it initially said keep debt payments current, but in one sentence, but don't worry about paying down principal. Period, and a period at the end. Certainly, you want to keep your debt payments current. You don't want to hurt your credit report. You don't want to hurt your relationship with your lenders or your suppliers or whoever that might be. But I don't know about this advice about don't worry about paying down principal. It's in here because it was in the slide, but I'm not comfortable saying with certainty that that's something you should do. I agree with you, LaToya. I think you should pay them both down. But obviously, you want to make sure that the interest gets paid, and as you can, the degree with which you can, you should pay down the principal as well. And also, this is a great idea. If you can make extra principal payments, you can pay it off sooner and thereby cut down your interest, which means you cut down the total cost of your debt. Okay, we're getting toward the end here. Okay, so you want to be proactive and not reactive. Don't wait for trouble and then fix it. Prevent the trouble. That's why doing those analyses, trend analysis, variation analysis, getting an analysis from an accountant, all of those things can help you think in advance about what might become a problem and how can I fix it now before it becomes one. And another piece of advice is avoid what's referred to as daily cash flow loans. So here they are. There's one called, this is like, if you, for example, have daily receipts, like your retail business or restaurant or something, they'll give you a line of credit against your daily receipts. So this is one called, this one was called Cabbage, but it looks to me like American Express bought them. But here's Blue Vine. So they will give you a loan based on various things, right? On Deck is another one. There they are. I'll give you the links. But you need to keep in mind that the average annual rate, is above 50%, and it can be up to 134%. So if you need a loan and you can get any other kind of loan other than this kind of loan, then you probably want to get it because it's really hard. This is as bad as payroll loans, payday loans for individuals. Yeah. That's another question. Cheryl, if you want to email me, please do. I can't answer that whole question right now. But I would say, oh, that was on the earlier slide. Yeah. Sorry to go up 2 slides. Yeah. There's the question mark there because I'm just not convinced that that's good advice. SBDC seems to think so, but I'm unconvinced. Okay, so wrapping up, only got a few minutes left. So financial knowledge is power. Don't be intimidated by finances. Be in control of your finances. Learn enough about at least those 3 core financial statements so that you'll know how to talk intelligently with your bookkeeper and with your accountant if you're not doing your bookkeeping yourself. So that you're in control of things. If somebody gives you advice, the accountant gives you advice, you can know, like, is this, does this fit with what I know from these statements? Because you're the one who has to make the decision, nobody else. So any last questions before we end? Please feel free to put them in. At this point, I can see the chat or the Q&A. Any last questions, please feel free to put them in. Yes, I've got something in the chat. There are no current plans to start the series from the beginning, but all of the videos and all the slides will be available to you. The videos are going to be put on the, I know they'll be on the Davis Chamber of Commerce site. They might be on the SBDC site again. Also, I'm not sure. Any other questions or comments before we end? So the wrap up. I just want to say thank you. I see that a lot of the same names every time. Somebody said thank you, thanks for the workshops, thanks to you for your participation. If I was just sitting here and talking and nobody ever wrote anything, I would never know, if we were going anywhere. So really appreciate all of your time and attention and your work on this. And I want to wish you the very best in your businesses. If you want any more help or training from the SBDC, we are here. There are 15 or 16 business advisors in the Sacramento area. And they're all available to you. All of our counseling services are free. Our advising services are free, and almost all of our trainings are free, like this one. Some of them have a relatively small cost. But again, thank you for your participation, and I wish you great success. And if if being a member of the Davis Chamber seems like a good idea to you, I encourage you to explore that, because they're a real go-getter chamber. Apparently there are a lot of chambers around the country that contact them and say, hey, how come you folks are doing so many wonderful things? How can we do all the wonderful things you're doing? So I would encourage you to check them out. And also to, check out and maintain a relationship with the SBDC. So thank you again. And thank you, Gwen, for managing the Zoom today. I really appreciate your help. This is actually the first time I ever met Gwen, but I'm glad to do that. She does marketing for us. Marketing is very important for all organizations, whether it's a business or a nonprofit or a governmental organization like SBDC. So thanks, Gwen, for your work, and thanks everybody for your participation. It's 1 o'clock. Have a great day, and I wish you great success. So Gwen, I don't know, it's recording. So I think I'm just going to go ahead and stop the recording.